Life insurance, why it matters now more than ever. Alexis Kane, certified financial planner with Lincoln Investment. Why is life insurance important? Do other people rely on you financially? The likelihood of you dying prematurely is low compared to filing a claim with maybe your car insurance policy or homeowners, but the consequences are much higher with not taking action. We're not just covering outstanding debts, mortgage, student loans, what have you. We're also protecting and maintaining that same standard of living that you're accustomed to, that your family is accustomed to. A common mistake that I see time and time again is not accounting for loss of income. If you're no longer here to support and provide for your family, that's a shortfall that we have to account for, and we do so with adequate life insurance planning. Stay-at-home parents, that's the next pushback that I'll receive in a conversation. Well, if you're no longer there to stay and care for them, if you're no longer here, then your spouse is faced with an added expense they're not used to accounting for. Childcare. Who's going to care for your children if you are no longer here to do so? Just some thought-provoking ideas and questions as we dive into the content this afternoon. How much do you need? Remember that life happens. The acronym LIFE in this case will stand for liabilities, the obvious, your mortgage, student debt, personal debt, credit card expenses, what have you. So we account for those. Income replacement, like I touched on in the previous slide. If you are no longer here to support your family, we have to account for that loss of income and of tax-free death benefit with life insurance. Final expenses. Education funding, if that's a aspiration, a goal of yours to plan for your child or grandchild's college education, we do so in life insurance planning. So these are all 4 examples of how much do you need, something to think about, but what doesn't this account for? 3 that come to mind easily is inflation, after-tax investment returns, and the third, which was maybe the most detrimental, is if you're no longer here, your spouse may not, can, or afford to go back into the workplace right away. The grieving of losing you and taking care of the family might just be too much. So if you're no longer here, we have to account for your income replacement, but also the spouse that's just trying to parent this family and exist and keep the lights on. We also have to consider their income replacement too. How can life insurance benefit my loved ones? Life insurance provides a death benefit for many reasons. The obvious, replacing your income from working, paying off outstanding notes like your mortgage, student loans that we all have and love, paying for college. If that's a future aspiration for you, you can prepare appropriately through life insurance planning. Providing your family with an inheritance, a windfall that they may not have had if you were still here. Pay estate taxes, making charitable contributions, completing your retirement plan. This can be a conversation that we have offline, but just to give you a brief overview, completing your retirement plan through life insurance can be completed through permanent life insurance coverage. And this is typically where a client will lean on Ben and myself, and we'll have the conversation and really just compare and contrast term and permanent insurance to see if this makes sense for your situation, your goals and objectives. What about my life insurance through work? A common conversation that we have time and time again. Group term life insurance is a common plan. So employees receive a multiple anywhere from 1 to 4 times your annual salary, up to a specified capped amount. So it's more meaningful if we use an example. So if you're earning $50,000 and the plan is written to pay out 1 time salary, that death benefit will be $50,000. This is part of the benefits package through your employer. There's no out-of-pocket expense to you while working. The death benefit is tax-free up to the first $50,000. You have the ability, the discretion to change the beneficiary and then convert it to permanent life insurance coverage upon departure of that employer. Something important to note, the death benefit is included in your estate if you die while covered under that employer plan. This is a term used, an industry term, incidence of ownership, and really just means that that death benefit will be included in your estate if you die and are covered under that employer-sponsored life insurance plan. And quite frankly, is that enough coverage for you and your family? Even if we use the example of 4 times that salary example, with the escalating cost of a college education, just your aspirations, I mean, I don't believe that $200,000 worth of life insurance coverage could cover any and all goals and aspirations. So it's just something to consider, worth looking at, to just have us review what you currently have and see how we can add value with maybe some personal life insurance with us through Lincoln Investment. What about life insurance through work that I pay for? This is something called voluntary life coverage. What this means to you as an employee is that you opt in to this coverage and premiums are deducted from your payroll, like all of your other itemized deductions. You can easily add spouses, partners, and children to this voluntary life plan. It often requires no evidence of insurability. More simply said, what EOI means to you is just a questionnaire of your medical, your personal health, a health questionnaire rather. It often requires no EOI up to a certain amount of death benefit coverage, but some plans, depending on how much we're inquiring, may require medical underwriting. It really is a case-by-case basis. It might be available year-round within limits. Premiums usually increase every 5 years, and they're often not as affordable or competitive as purchasing an individual policy, really just in the open marketplace. So as an example, your premiums at age 30 or 35 would be much more affordable, than maybe at 45 or 50 years old, because you're getting older, maybe a bit wiser, and with that, it's more expensive to cover you. So the insurance company will then share that added expense with you in an increased premium. This type of plan tends to favor employees who are older, maybe not as healthy, smokers, because of the idea of no requirement of that EOI. If you have some awareness that maybe you wouldn't qualify for an individual policy, this might be the only path that you can go down. But for younger, even just for folks in good health and decent health, it is worth looking into an individual policy. The pricing might be a bit more competitive. And lastly, it's tied to your employer, this voluntary life plan. What kind of life insurance does Lincoln Investment offer? Individual life, term, or permanent. And the way that Ben and I determine which one is right for you is having a conversation. With financial planning, everything is centered around you, the client, and what your goals and aspirations are. From that conversation, we can then determine whether term or permanent coverage makes the most sense for your goals and available cash flow. We really streamline this process from soup to nuts. It's really straightforward. So clients apply for coverage and premiums are drafted from a savings or checking account. It's really a 4-step process that we've made it. We have that initial meeting, that conversation centered around goals, and then from there an application is submitted to the insurance carrier. Whatever insurance carrier is partaking in this case, they'll set up a phone interview, just about 30 minutes of your time, and from there, then you schedule your underwriting, that medical exam. Something important to keep in mind, all of these expenses with underwriting, the phone conference, those costs are absorbed at the insurance carrier's level. There is no money out of your pocket to this point. The 4th step in this process is, if applicable, requesting medical records. And from there, you'll get a sense of how much, depending on what and how much insurance we're inquiring, it'll be for that premium amount. So it's really a 4-step process that Ben and I hold your hand through from start to finish. Moving back to the point of clients apply for coverage and having it debited from an account, you can easily add children, there's child riders, but not spouses to the plan. To dive into this idea a bit further, I don't want to sound morbid. This conversation's already uncomfortable enough of thinking of your own demise, but it happens. Parents bury their children from time to time. It's something that we would never wish on anyone, but there are opportunities where you can purchase child riders just to have an added bucket, if you will, of money to pay for their final expenses. It always requires some level of medical underwriting. In some cases, in some carriers, there's something called accelerated underwriting, which to you means no health exam, depending again on the type of policy and the amount of coverage that may or may not be available to you. It's available year-round. We're here to meet with you at any point in the year. I know your time is very limited now. Rates increase once you pass your half birthday. That's also something important to keep in mind. The maximum amount of death benefit is based on insurable interest. What insurable interest is really just a fancy way of saying the maximum amount of life insurance that you can purchase for yourself. Typically, an insurance company will cap you rather, at 30 times salary. That's an insurable interest explained. Once you're locked into a contract, into a policy, premiums are locked for either the term of that policy or for the rest of your life, and they're usually a lot more affordable than that voluntary life plan that I was explaining in the previous slide. Individual life tends to favor younger, more healthy, and non-smoker individuals. And it also, another benefit, if you will, when you depart from your employer, this is not tied to your employer. So it's its own plan in itself. So now you might be thinking, well, which one is better for me? Individual life or voluntary life with my employer? It really does depend on you, your loved ones, your priorities, goals, and needs. That's where we have that initial conversation, you, myself, Ben, and we really can just provide light on what you need this insurance to accomplish. Understanding what the goals are, there's a product to fit into really any goal or need, but really just providing transparency on what you need from the policy from the get-go. We weigh the pros and cons of each option, and then we can make a sound decision that makes the most sense for you. Remember, individuals are not commodities. We're invaluable. Think about what you want the insurance to protect, what means the most to you and your family, and really just shedding light on, again, you and your goals and what you can afford. A little bit of insurance is much, much better than no insurance at all. And have a conversation with your financial advisor. We are here to help you, and we want to help you protect your loved ones with adequate life insurance planning. So I thank you for your time. Again, if there's any questions, you can scan that QR code on the screen, and that directs you right to the calendar. But I'm going to minimize this and open the questions box, and we can filter through any and all questions. So thank you for your time.